Welcome to the July 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of July 2025, the global GDP growth for 2025 has been revised upward by 0.1 percentage points to 3% based on purchasing power parity, by Oxford Economics. This adjustment reflects stronger than expected performance in the first half of 2025. The revision was also supported by positive momentum from recent US trade agreements with key partners, including China, the UK, and Vietnam. The global GDP growth forecast for 2026 remains unchanged at 2.9%. At a country level, US GDP growth forecasts have been revised upward to 1.6% for 2025 and to 2.1% for 2026, reflecting the anticipated impact of policy measures under President Trump's One Big Beautiful Bill. In the EU, GDP growth for 2025 has been maintained at 1.2%, while the 2026 forecast has been revised slightly upward by 0.1 percentage points to 1.1%. China's GDP growth has been raised by 0.4 percentage points to 4.7% for 2025, driven by fiscal stimulus and stronger than expected export performance in H1 2025, although growth is projected to moderate to 4.1% in 2026. In the first 5 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, increased by 2.9% year-on-year to reach 1,554 BCM. Growth was recorded in the EU, UK, and North America, while Asia showed a decline. Following a rebound in May, EU natural gas consumption declined in June 2025, falling by 0.8% year-on-year to 16.5 BCM. The drop was primarily driven by weaker demand in the residential and industrial sectors. Total electricity generation in the EU increased by 4% year-on-year, reaching 198 terawatt-hours. Gas-fired power generation grew by 14% year-on-year, playing a key role in offsetting the shortfall in coal and hydro output, which was mainly due to unfavorable precipitation conditions in the region. In May 2025, China's apparent gas demand, which includes domestic production and gas imports, recorded a growth of 1.2% year-on-year to 36.4 BCM. Gas-fired power generation increased by 2% year-on-year, as lower output from hydro sources increased reliance on gas. China's total power generation rose to 805 terawatt-hours, up from 769 terawatt-hours a year earlier. In June 2025, US natural gas consumption rose by 0.6% year-on-year to 68.5 BCM, driven by increased demand in the residential, commercial, and industrial sectors, which grew by 11.4%, 4.8%, and 0.8% year-on-year, respectively. In contrast, the power generation sector recorded a decline of 1% year-on-year. In May 2025, global gas production growth was estimated at 1.8% year-on-year, to stand at 354 BCM. Africa, Asia-Pacific, the Middle East and North America showed positive production variation, with North America, specifically the US, leading the growth. On the other hand, Europe witnessed the greatest output decline among the remaining production regions, driven by lower gas output in Norway. European gas production fell by 5.9% year-on-year to 14.3 BCM, the 7th consecutive monthly decline. This was driven by reduced gas output in Norway, along with the decrease in the UK's and EU countries' gas production output. However, the magnitude of European production decline was limited by the rise in Turkey's gas output, along with a slight rise in the Polish production. In May 2025, China's gas production maintained its growing trend to reach 22.1 BCM, representing a 9.3% year-on-year rise. For the period January to May 2025, China's cumulative gas output stood at 109.6 BCM, reflecting a 5.9% growth. Meanwhile, in June 2025, US total gas production continued its growth trend, to record a rise of 3.1% year-on-year and achieve a monthly output of 90 BCM. This increase was supported by the increased Henry Hub prices, which improved market conditions, in addition to the growing domestic gas demand and rising LNG exports. In June 2025, the EU countries imported 11.5 BCM of PNG, which is 12% less than 1 year ago. Cumulative imports by the EU after the first half of 2025 reached 71 BCM, a 10% decrease year-on-year. In this period, supply from Algeria increased by 2%. During this period, PNG supply to Germany increased by 5% year-on-year, accounting for almost a quarter of the regional imports. Belgium is now ranked as the third largest PNG entry point in the region. In May 2025, China set another new monthly record for PNG imports, at 7.2 BCM. This was an increase of 10% year-on-year, and was the 13th consecutive month of year-on-year increases. Total PNG imports after the first 5 months of 2025 increased by 11% to reach 33 BCM. In June 2025, global LNG imports rose sharply by 9.4% year-on-year to 34.8 million tons, marking the highest annual growth since November 2022. This increase was mainly led by Europe, supported by stronger gas storage reinjection demand, lower domestic production, and reduced pipeline gas imports due to maintenance activities in Norway. US LNG flows continued to favor Europe owing to more attractive netback prices. Meanwhile, the decline in Asia-Pacific's LNG imports moderated, showing a less severe year-on-year contraction than in previous months. On the supply side, global LNG exports increased by 4.8% year-on-year to reach 34.3 million tons, supported by higher exports from Congo, Mauritania, Mexico, Nigeria, Qatar, Senegal, Trinidad and Tobago and the US. By the end of June 2025, the underground gas storage level in the EU increased to 61 BCM. This represented 59% of the region's capacity but is still 9 BCM less than the 5-year average. Around 26 BCM of gas has been restocked over the gas injection season thus far. In Asia, combined LNG stocks in Japan and South Korea were estimated at 12.5 BCM, slightly greater than the 5-year average. In the US, the average daily storage level increased to 80 BCM, or 60% of capacity. Net gas injections in the US in 2025 reached 36 BCM thus far. In June 2025, spot gas and LNG prices in both European and Asian gas markets rose sharply, accompanied by increased volatility. TTF spot prices averaged $12.30 per million British thermal units, marking a 6% month-on-month and 14% year-on-year increase. Northeast Asia spot LNG prices averaged $12.96 per million British thermal units, increasing by 12% month-on-month and 4% year-on-year. In contrast, US Henry Hub spot prices continued their downward trend, averaging $3.04 per million British thermal units, though still 20% higher year-on-year. Looking ahead, anticipated increases in gas demand for cooling during the summer months may continue to provide upward support for prices. Thank you for watching this short video presentation on the July 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.